Hello, good evening from central London. And today we're going to be looking at whether UK house prices is going to go down in 2025. I've had some very interesting conversations with quite a few buyers, sellers, and landlord investors. And so today's live stream is going to be looking at house prices, especially since the stamp duty deadline was announced back in October. We'll be looking at also in terms of that budget and how it's threatened property investment in the UK. And we'll also be looking at rental inflation together with what's happening with landlords at the moment and how that's impacting stock levels in the UK housing market right now, not only from a rental point of view, but also from a sales point of view across the country and here in the capital. So this is going to be an interesting one. As always, want this to be quite interactive with questions. First things first, I want to get some housekeeping things out the way. Make sure that anyone is online. Hopefully, I have someone online listening in and will give me a thumbs up as to whether we are have any audio and video. Cool. So bear with me one moment. So Sonia, hi there. Can hear me? Amazing. Thank you very much. Much appreciated. And anyone who's just sort of coming across this live stream and don't know what we do this every Wednesday around about 5:30 to 6 p.m. We jump in for an hour. We have some guests that I've promised we're going to have at some point in the next few weeks. So if you haven't done so already, just make sure you subscribe. We have some shorter videos as well, which I'm sure you're going to appreciate. But again, today's main theme is going to be based on whether there is going to be a price drop in 2025. So we're going to lead with this article here, which is by the Times. Will house prices go down in 2025? And this was done probably around about, just a few days ago, actually. So UK house prices recovered last year, and with the Bank of England cutting interest rates, there are hopes that house prices might rise in 2025. The price of the average house rose by 4.6% last year to £268,000. Looking ahead to 2025, combination of wage increase, low inflation, and Bank of England cutting interest rates, making mortgage more affordable could all boost house prices, but new property taxes are coming too that could potentially dampen demand from buyers. So a few things to unpack here. As we've touched upon the house price growth from 2024, if we know anything, we know from Zoopla, Savills, and other property experts, they did predict for 2024 there will be a loss. So when I say a loss, there wouldn't be any growth. On the contrary, there will be a decline of around about 2%. But of course, things started to improve, especially towards the beginning of the year, a little bit more confidence, despite elections and everything else. And yet what we did have was an increase over the course of the year of an average of around about 4.6%. Now, when it comes to mortgages, I've been having a conversation with quite a few landlords, and it's still challenging out there. One landlady I just got off the phone with, she tells me, Danny, I have to remortgage this year. It's not easy. It's definitely better than what it was at the beginning of 2024, yet to make the numbers work, it's rather challenging. And so, what we find is whether you're a homeowner or whether you're a landlord investor, you're looking for ways, of course, to minimize that, because especially now whereby the Section 24, which is the implementation of removal for landlords to be able to allocate their mortgage interest as an expense, then all of this has become so much more expensive, which is why we're seeing quite a few landlords exiting the market. And that's something we're going to be looking into. There's an interesting article whether there continues to be a landlord exodus, and if so, how it's impacting the market in terms of stock. So just wanted to unpack that a little bit. And again, if you have any questions, throw them across. I will get to you slowly but surely. So looking at this from a point of view of taxes, taxes is going to be what's going to threaten the the UK housing market, especially investment overall, more than anything else. Taxes and the cost that comes along with that, but also, of course, mortgage rates. So during the 2024, house prices rose nationwide. The average property increased by 4.6%. Now, many areas across the country, house prices were also buoyed by demand and outstripping supply. So that Amanda Bryden, head of mortgages at Halifax, she added that homeowners might have held off putting their property on the market until interest rates fall, which meant fewer properties available to buy, popping up prices. What will UK houses be worth in 2030? Now, as per this article, it's difficult to say with any certainty what the average house price will be in 2030, as anything could happen in the next 5 years. Good Move, a property portal, has crunched the numbers to make some predictions using data from 2021. It said if average house prices continue to rise as they have been doing, the average property will be tip over around about £300,000 mark in 2035. So I'm going to move out from this article because there's another interesting one. But there are various different reasons as to why house prices are so high. Inflation, which is in the rate at which prices are rising over time, is a big factor. You can read more about inflation effects, blah, blah, blah. A rising population is another reason, as it puts more of a demand on the housing market. So the national statistics says that over 15 years between mid-2021 and 2036, the UK population is projected to grow by 6.6%, 6.6 million people, which is an increase of 9.9%. Now, the interesting thing about this is certainly when we look at it from a point of view of population, and not only here in the UK, but across the world, we know that half of the population, actually, is it half? Yeah, we're expected to have half of the population living in urban areas by 2050. It's something like that with regards to those numbers. Now, these are big numbers, and therefore, when I have investors and landlords ask me where's the best places to invest and whether rural areas, is a good idea, I always say, stick to the cities and urban areas. This is where that trend continues to go, despite the race for space during the pandemic period. So, I'm going to dive straight into this article from Zoopla, which is the report broken down. This just came out a few days ago. So this is the house price index for February 2025. Now, the housing market is resilient, supported by faster growth in average earnings. There are the most homes for sale in 7 years, which will keep price inflation in check. But are buyers missing opportunities in the flat market? So, key takeaways from this: sales agreed up by 10% year on year, and yet 11% more homes come onto the market. House prices inflation ticks over 1.9% in response to higher mortgage rates and rising buyer costs from April. Now, another interesting question, and I'm going to go through this because this is going to relate to landlords, okay? Another interesting question is also as to why there are so much more properties now on the market. And part of that is absolutely there were sellers out there that weren't confident in the market last year and decided to hold back. And it's also interesting to find out where these sellers are coming from. So I wanted to share with you this here. This is a very interesting article, which is landlords exodus leads to huge oversupply of homes on sale. So certainly there's an element of sellers, whether they were homeowners or otherwise, were holding back because the market just perhaps they didn't feel they could match or achieve their property price that they desired back then. And now they're more confident and they feel they are a seller in it. So a prominent index suggests that here you are. A prominent index suggests that areas of Greater London, the South End, and Southwest are facing a 12-year high in sales stock levels. And it appears much of the reason is the exodus of landlords quitting the private rental sector because of taxes and red tape. So the home index says the level of oversupply in some southern England regions is such that vendors are increasingly willing to take a hit on the expectations in order to secure a sale. So this is in marked contrast to areas of the north of England and Scotland. So, Home Director Doug Shepherd puts much of this stock glut down to the increasingly unviable private rental sector. He says yields remain significantly better in the north, and this factor does not look set to change soon. In certain postal districts of London and the southeast, rental yields are less than 3%, certainly not enough to pay a significant mortgage and all the other associates' expenses. Meanwhile, savvy investors can find yields of high of 12% in certain postal districts, all of which are to be found in the north. And that sounds amazing. Double digit yields. I mean, who wouldn't want that? That being said, a word of caution. If you're looking at that type of double digits, it's very likely that those investments will certainly come at a risk. And when I say that, certainly when we look at areas that are less desirables are the ones that yield the best returns. And sometimes that isn't the best approach when it comes to investments. One thing to say when it comes to London. So pre-pandemic, it was challenging to see properties certainly more than 4%. There will be some, but not many. Right now, there are sections of the region which offers 5 to 6%. I was reviewing one investment where one landlady wants to sell her property. If I look at that property right now, this is based in Camden. This property with the tenant that's in situ at the moment is providing 6% yield. So there are deals out there in the capital worthwhile. These are deals that weren't around back pre-pandemic times. So going back to the article, these are key factors driving the current market. Oversupply stems largely from landlords deciding to quit in low-yielding areas. Vendors and agents alike understand demand is unlikely to be able to grow sufficiently in order to match the surge in new instructions, especially after the increase in stamp duty in April. So, the upside for savvy buyers is that there are certainly bargains to be had in some locations, but as many investors acknowledge, catching a falling knife is risky business. The question that is difficult to answer is when will the rate of supply return to a more normal level, since rental returns fundamentally underpin the value of property? And we're going to be looking at that rental returns, by the way. We're going to be looking at that very closely, and more specifically to rental inflation and what it's doing at the moment. So when yields return to a tenable level for investors, logically, this would only be achieved through a combination of rising rents and falling prices. So elsewhere in the latest home asking price index and the market survey, annualized national asking rents have grown just 1.9%, held back in part by London's annual rent fall of 0.5%. In the capital, the City of London, followed by Hounslow, indicate the largest decline in asking rents, with annualized falls of 18.9% and 7.7% respectively. Meanwhile, the best performers are Kingston upon Thames, Sutton, Wandsworth, and rent increasing by 8.9%, 8.8 and 8.3 respectively. And then you've got the Midlands with 10.2% rental growth year on year. What is interesting, guys, is whilst this is happening, let me share with you something. Because I find this fascinating. There was an article whereby London was named the buy-to-let capital of the UK, where it had the most. I'm going to try and find this here. Where it had the most new landlords come into the market in London. And I thought that was a very interesting stat. Certainly, as we saw that there was a city in buy-to-let investment. Okay, I can't find this, but I'll definitely ask my admin to try and bring that up because I found that very interesting from a point of view of landlords entering the market. We know that London, funny enough, is the buy-to-let capital of the UK, and I guess that's something. There's something to be said about. I guess reliability when it comes to attracting the right tenants, but also from a point of view of long-term capital growth, which London never really fails to provide. So, looking at the threats when it comes to, let me bring this up. This was an interesting article. Budget tax hikes threaten investment into UK property market. And now this is the big challenge, or at least concerns, that most investors have. And it is these budget tax hikes. And by the way, it's not only a threat to the UK property, but it's also a threat to other businesses. But for this article and for this live stream, we'll be specifically looking at property. So, more than a third of property analysts who took part in the recent poll believe that tax restrictions announced in the 2024 autumn budget will be a key barrier to real estate investment this year. According to a survey commissioned by audit tax and consulting firm RSM UK, 35% of businesses said that additional tax restrictions will be a key barrier to investment, jumping 12% on the previous year. Now, economic recession took the top spot as the biggest barrier, 50% for the third consecutive year. However, it fell from 61% in 2023. The survey found that business rates, 33%, and political instability, and I think this is also a big one, 31% were also perceived as major barriers to invest, in addition to tax measures announcing the budget, including changes to capital gain tax, inheritance tax, and stamp duty. So, conversely, real estate businesses think access to funding has improved in the previous year, but less. Let me bring this up here where we can see this. But less than a fifth, that 16%, say it will get easier in the next 12 months. Timed despite government pledge to boost public investment by 100 billion over the next 5 years. So nearly a third, 31%, think capital gains tax and stamp duty taxes should be reformed to increase investment. However, despite restrictions, real estate market optimism has increased by 13% this year, with 68% of businesses feeling positive. So, we got Stacey Eden here from RSM UK said, despite government's commitment to rebuild Britain and accelerate public spending, the punitive tax measures announced in the budget are holding the industry back from long-term growth. Economic recession remains a major concern, but it's no surprise that tax restrictions are perceived as the second highest barrier to investment, as many real estate businesses feel that the lack of capital gains tax and stamp duty reform are stifling liquidity and growth in the market. So as a result, this could potentially discourage domestic and foreign investors from entering the UK estate market, which could lead to a slowdown in the development of new homes and make the government's mandatory housing targets even more unattainable. The housing shortage remains a critical issue, but the government's national planning policy framework is a step in the right direction and will help to resolve the supply-demand imbalance. So, it's interesting that we see recession as being one of the major concerns there. And it will be interesting, anyone who's watching this video, let me know with regards to recession. I mean, is this something that you're concerned about? perhaps this year or the following years that come along. Most people that I speak to, that doesn't seem to be the major issue. When I say people, I'm talking about landlords. It's also definitely the taxes and the red tape around that. Okay, guys, I'm going to go and start answering some of the questions that you have here, and hopefully I can shed some light. Just going to take a few zips of water. Okay, so what do we have? We've got a few questions here. Now, I may not go through all of them immediately, but I will get around to it. I promise. I've been hearing about stamp duty changes. How exactly do they affect buyers and sellers right now? Well, the reality is, Winnie, that anyone who wanted to beat the deadline, which is literally in a few weeks' time, uh, they're not going to beat it now in terms of, unless they started the process somewhere sort of December or January, beginning of January, they're not going to meet the deadline, especially if there's finance involved and if it's a leasehold. There's no way if they're starting that process now. So, what buyers are going to be doing is certainly factor in these extra costs in stamp duty, because if I'm not mistaken, when it comes to home buyers, they're going to be something along the lines of 50% of home buyers will have to pay an extra £2,500. And then when it comes to first time, so that also increases for them. I believe it's 40% of them or something like that. We'll look at those numbers very shortly. Anyway, the in a nutshell, it does mean that those buyers will factor in those extra costs and will be negotiating quite aggressively with sellers to get a discount. So I hope that makes sense as to how that's going to how that's going to impact relating to stamp duty. Rafael, why are so many landlords selling up? Also, do you know, Danny, what's pushing them out of the market? Yeah, so let's put this, it's important to put this into perspective, because this idea that all landlords are quitting the buy to let market isn't necessarily true. It is true that the majority of a certain segment of the market, of the segment of landlords, are exiting. And these tend to be accidental landlords. These are landlords who didn't go out to purposely become a landlord and buy investment property. It may have come through an inheritance, dare I say, a divorce, perhaps um, getting a bigger property, and not perhaps being able to sell the property, the current property, and it wasn't viable, so they kept the property on. These are landlords that had no desire to be a property investor. Now, with all the red tapes that have come into place, and now with the former Chancellor George Osborne taking out the ability to put the mortgage interest as an expense, it no longer makes sense, especially holding a property in that particular structure. And therefore, what we find is the bigger landlords, professional landlords with 5 or 10 properties, they're definitely offloading properties that are not making sense to them. And then with accidental landlords, perhaps just moving away from the market entirely. So that is the reason. But the mortgage, that implementation of Section 24, I think that was the killer when it comes to tax. I think that's the biggest challenge that most landlords are facing. That, in combination with the mortgage interest having increased, so you suddenly can't put it as an expense, but then at the same time, that cost has gone through the roof. So landlords being taxed on turnover instead of profit. Good evening. Good evening to you, Mr. Monkey Business. So, would be good to know, what do these tax hikes mean for someone looking to invest in property? Is it still a smart move? I believe that as long as you have it in a limited company. By the way, guys, disclaimer: this is no way tax, financial, or even legal advice. But from what I see from a lot of investors that we speak to, Amrita, they certainly make it profitable if you have your property held in the right structure, meaning you incorporate, so you can be as tax efficient as possible. And then, in addition to that, of course, you're managing your property in a professional way and making sure that you are maximizing on the rental and being efficient. So I hope that helps. And of course, that you avoid being fined, because if you've missed it, you're not subscribed to my channel, make sure you subscribe and you check out a most recent video with regards to the biggest fines that landlords are getting right now. That's probably a video you want to look at, because of course that's going to impact your profitability. So, Danny, do you think house prices will actually drop, or is this just a temporary slowdown? Okay, so I'm going to put my hands up with regards to the title, at least existing title. It may change. Will house prices continue to go down? A bit clickbaity, and yet at the same time, it's not. It is based on an article, the first article I've shown you. Now, I think that prices will increase this year, and especially when we look at property experts' reports, and we will dive into that. I do believe it's going to increase, yet it's going to be at a very slow pace. If we believe anything that Saville says, I believe the increase that we're going to see over the course of the next 5 years is going to be anything between sort of 20 to 25%. And then when it comes to London, it's going to be around about that 18% over the course of those 5 years. One thing I will say is, actually, let me share this in rental, because I believe rental is going to increase, and not by a small amount. It's going to increase due to some changes. If it goes through and passes the House of Lords, as a consequence of that, I do believe that rentals are going to increase more than experts have predicted. So more about that very shortly. So, Jonathan, I keep seeing headlines about north-south divide in the housing market. What does that actually mean? So, when we look at house prices and we see an average of UK house prices has gone up by, I don't know, let's say 4%. I'm making up numbers here. And actually, it did go up by 4.6% last year, according to a few reports. So that's a UK average. Yet, what we know about real estate is hyper local. So not only from a region point of view, but even from a neighborhood to neighborhood. So it could very well be that house prices in the north went up by 6%, 8% on average, yet it only went up by 2% on average in the south. So you've got 6% in the north, 2% in the south, and then suddenly it means that there is an average of 4%. So there is a divide whereby, I'm going to stick from an investment point of view. There isn't a divide from a point of view that, from a stamp duty point of view, from a yield point of view, and also from a budget point of view, the north allows it has a lower barrier to entry from a cost point of view. But if you're an investor that you've been in the market for years, at least the investors that I speak to, they are certainly not abandoning London to go to the north. They are certainly diversifying, and that's a fair point. But they're not abandoning London. London continues to be a safe bet for your investment property. You will compromise ever so slightly on yield, but that's just the name of the game. Everyone knows that when you look at from a capital point of view and you're looking at capital growth, there's always going to be a compromise when it comes to yield. I hope that makes sense to you. So listen, I'm going to go through a few more articles before I continue reading the next questions, okay? Now, the next ones I wanted to certainly go through is going to be latent supply on the rise, supply and demand. Let's look at the lettings. Let's look at rental. Unless you have any other questions on house prices, and I'll go through. Let me have a look here. Actually, since we're going to be jumping on to rentals, it makes sense for us to actually wrap up the house housing market rather than rental. So, how are first time being affected by all these changes? Are there still good incentives for them? So, I think that they had a good run, and that run was going to end at the end of March because they will be paying more. So, nothing goes up in a straight line without coming down. True. True. I always say, any boom doesn't necessarily ends with a bust, but certainly booms on forever, and they will come to an end. Just like when we look at the rentals, there's been a boom in rentals. There's been 30% increase over the course of the last 3 years, and we're certainly going to see how that's slowing down very shortly. If I'm thinking about becoming a landlord, is it worth it, or is it just too much hassle now? No, buy to let certainly a way to create generational wealth. Last time I saw a survey about this, I certainly saw that landlords pointed to property still being their best way to invest. And there were several factors for that. Number one was the flexibility, meaning that they can do different things with the property, whether that's a long let, short term rental, corporate contract, service accommodation, or they can even use it for their own purposes or their family. You can't do that with other types of investment like shares. The other point as well is that the leverage. There is little or no comparison of investment whereby you can use leverage being the mortgage. And of course, you're going to get that capital growth based on the loan that you have, the total amount of the mortgage, or what you purchased the property, should I say, rather than what you've invested itself. So, as an example, you invest 50 grand to buy a £250,000 property. Your capital growth with inflation and everything else is going to be based on that 250 grand, not on the 50 grand that you've invested. Again, there isn't many places where you can go and invest and get that type of increase and have that leverage. So here we are. And with regards to hassle, there's more compliance, by the way. What does that mean? If you have the time as a landlord, then just make sure you're compliant. It's not rocket science. It just takes time and you need to know what you're doing. If it's too much of a hassle, give it to a property manager, and that property manager will manage it professionally. Hopefully, that property manager will be an ALA member, which is a professional member. It's an association rather than just a cowboy. And hopefully you get a recommendation. It's better to buy a house and leave it stood empty. No hustle. I am not sure about that, but it's okay. But I have read somewhere that rental supply is increasing. Does that mean it's easier to find tenant now? Okay, so let's talk about that. We're going to talk about that rental, but just to finish up here with Andrew, with all these changes, it's now a good time to buy, or should I wait? Again, please don't take this as financial advice, but I would say it depends on whether you are getting finance. What we do know now is that mortgages are more accessible now than what it was sort of a year ago. And we know that there's a little bit more negotiation power right now. So I think right now is as good a time as ever. Next year, landlord won't be calling landlords. They will be called social workers. That's an interesting comment. That's an interesting comment, Monkey Business. If I want to get into property investment, what's the biggest mistake I should avoid? I don't know what's the biggest mistake you should avoid, because there's lots of mistakes that you should avoid. But what I will say is the biggest thing you could do right now is go to my video that was launched last week, and that's the biggest thing that you can do to avoid any huge mistakes. I hope that makes sense. I'm going to jump in straight into the rental market and lead with this article here, which is letting supply on the rise as supply on the rise as supply demand imbalance narrows. So The average letting agent has 13 homes for rent on supply demand. Let me have a look, actually, something here. Actually, I have a more interesting article to share than this one. We could come back to that one in a sec. Let's look at rental inflation. So, rental inflation drops to a 3.5% year low, Zoopla report reveals. Now, this title can be quite concerning. Yeah, I'm going to put some context around this. Rental inflation across UK has slowed to its lowest level in 3.5 years. Average rents rising by just 3% over the past year, according to the UK market report from Zoopla. Now, to put this into context, of course, if you're comparing this to the boom that we've seen over the course of the last 3 years, where we saw 30% plus in certain regions of the UK, then of course it's slowing, and so should it, because it's not sustainable. Believe me, it's not sustainable for tenants, and if it's not sustainable, this wouldn't be a good investment choice for landlords, because otherwise that's where it all goes pear-shaped, whereby if it's not sustainable for tenants, this is where government intervenes, and government understands zero about the rental market, and that's why we have the chaos that we have at the moment. So the figure represents a significant drop from 7.4% increase in average rents a year ago. Now, the slowdown in rental growth comes as the supply-demand balance shows signs of narrowing. The number of homes available to rent has increased by 11%, while rental demand has dropped by 17% compared to last year. So what's happened is two things here. The amount of supply has increased by 17%, and the demand has decreased. And of course, that's going to make a difference in terms of I guess to an extent, the amount of money that you can actually charge a tenant. There's less demand, more competition. And yet, what we do know is that there still continues to be around about double digits applicants for every one property. So there's still competitive out there. However, very different to what we saw a couple of years ago when there was more than 50 applicants to one property. I mean, you would publish a property on the market for rental, you would have to take it down within the first 8 hours because it was ridiculous, the amount of applications that would come through to view the property. So we're now coming to a somewhat normal market, which is good, but still, there is still more demand for properties than there were sort of pre-pandemic levels. So just to point that out, so there's nothing to be scared of here. I hear landlords sort of, are getting very concerned about what's happening. I think as long as your property looks good and you're marketing your property to the right target audience and the right tenants that you want, there shouldn't be any challenges with this. Fair enough, what we are seeing is properties on the market for more time. And that's understandable given what's happening here from a demand and supply point of view. Again, properties will be on the market for less than 24 hours, sort of 2-3 years ago. Right now, it's not unusual to see a property on the market for a couple of weeks or even 3 weeks. January and February, that's understandable. We're now coming into a spring market and summer where typically it is a busier market. And I don't think that's going to change anytime soon. So the slowdown in rental growth comes as supply. Okay, we talked about that. Supply and growth, the number of homes available to rent increased by 11% and the demand has dropped by 17%. So I got that the wrong way round. Apologies. So the available homes to rent have increased by 11% and demand has dropped by 17%, both double digits. However, the market remains highly competitive with 12 renters still chasing each available home. The average agent has 13 homes for rent, up from a low of 10 in 2023, but still 22% below the pre-pandemic average. Bear with me as I take another sip of water. So, however, the market remains okay. I've gone through that. While short-term increase in rental stock is helping to ease pressure, and hear me out on this one because this is going to be an important point. Affordability remains a key constraint on rent growth. In fact, the report states that the slowing of rental inflation has more to do with the worsening of affordability than an improvement in supply of homes for rent. Now, if you missed that, I'm going to repeat, but this is an important point. While short-term increase in rental stock is helping to ease the pressure, affordability remains a key constraint on rental growth. In fact, the report states that the slowing of rental inflation has more to do with the worsening of affordability than an improvement in supply of homes for rent. Over the last 3 years, UK rents have risen by 24%. And again, I've seen regions 30%, adding an average of £3,000 per year to tenants. Housing costs. £3,000 per year to tenants' housing costs. The average annual rent now stands at £15,000. That's certainly not in London, because I'll tell you, in prime London, I'm not talking super prime, I'm talking sort of boroughs of Camden, Islington, Westminster. The average rent that I'm seeing at least is around about 30k per year. Despite rising availability in short-term rental, the number of rental properties has remained broadly static, around 5.5 million since 2016, largely due to tax changes, higher mortgage rates, and landlord exiting the market. Further policy shifts include upcoming renters' rights bill and proposed energy efficiency regulations. And the EPC is certainly something that has a lot of landlords concerned. There was a very popular YouTube video that I published. It was 2 weeks ago. If you haven't seen that with regards to EPC, I tell you there's a ton of value there. You definitely want to go and check that out. Rental inflation has slowed, which will be welcome news to renters, but there are still 12 people chasing for every home rent. Zoopla executive director, growing supply is essential to support those on lower incomes, and policy reforms for the rental market need to minimize the impact on supply. So here's a rental market snapshot from Zoopla. January 2025, we've got UK overall average rent is just over or just under £1,300 year on year. January 2025, 3%. 3 years is 7%. Now that's the UK. Now, UK excluding London, we're looking at average rent of £1,050. It's amazing, by the way, because I keep a close eye to them in the north, and it's crazy to see how in the north, for at least those new builds, it's become the norm just above £1,000 for rental, at least in the regions that I'm looking at. So it's interesting. Let's look at London if this provides London. It should do. Well, it doesn't have London here. Oh, here you are, London. The London average is £2,100. So sort of around about 25k. I'm sure that's going to be overall London, but once you narrow down into the prime London areas, you're gonna see much more than that, more than 25 grand per year. I'll tell you that. And then year on year, you've got 1.1%, 5%, and then 7% here on a 3 year. So regional variations in rental growth. London saw the lowest increase in rents at just 1.1%, while rents in Northern Ireland surged by 9%. Other notable changes. So interesting. So outlook for 2025, looking ahead, rents are forecast to increase by 3 to 4% over the 2025, with affordability remaining the key factor in limiting further rises, while lower net migration and modest increases in rent stock are helping to moderate demand. Policy changes and landlord costs could further restrict supply. So there we have it. And I'm going to share with you my view as to why I believe rents could be higher than this 2 or 3% that they've stated here. Now, if you've been following my channel and you've been following what's been going on with the renters' rights bill, one of the proposals there is to be removing the what they call a ban on renters, a bidding war in rents. So renting bidding wars. What this means essentially is currently, if a landlord believes that their property is worth around about £3,200, but they're not quite sure, um, they will put it for £3,000 as an example per month, right? Now, if it ends up that they have missed the mark and they have 20, 30 people come in because it's incredibly cheap and the landlord didn't get quite put the price that they should have, then they probably end up at 3 to 3.5 grand. Naturally, the market corrects itself. The market really tells as to what the true rental price is. Now, the government wants to bring a end to that. And whether it's right, wrong, here are the consequences that I foresee. Once that comes into play, that means that landlords, if they put the property up on the market for rent for £3,000 and a tenant wants to pay more for it because they don't want to be, outbid by another tenant, and you've put the property so incredibly cheap, well, as a landlord, you won't be able to accept that. You cannot achieve or receive a penny more in courage more than the asking price that you've listed the property on. So what's going to happen is naturally landlords are going to be concerned that they're going to leave money on the table. So if they feel the property is worth around about 3,000, 3,200, what do you think they're going to do? They're going to put it at 3.5 grand, because if they can't increase the price, they want to make damn sure that they're not leaving any money on the table. And if it's too high and they get no leads or very little interest, then they'll adjust the price accordingly. But now having the peace of mind that in fact the rental price is something that's going to align with the market demand. And so therefore I anticipate rental prices will increase substantially if this law is passed and when it's passed. I hope that makes sense. Now, from a rental point of view, let me have a look here at something. I did want to find London back. Okay, so I promised you this article here because there's been a lot of points here with regards to London. And I found this article very interesting for you landlords who own property in London, or for you landlords who scoff upon and frown upon a London investment. So London back in favor as rental market stabilizes. This was like 3-4 weeks ago. So London has bounced back as the buy-to-let capital of the UK, with 13% growth in new buy-to-let landlords between 2023 and 2024 compared to the just 4% growth the previous year. So after stuttering in 2023, London's strong continued tenant demand and the broad array of property types buoyed the market once more last year. So, well, Glasgow topped the chart in 2022 to 2023 with 11% plus growth last year, saw it fall back to the bottom of the board with a much more conservative 7% growth in new policy holders. So we can see London here right at the top of the chart. 2024 ranking, London South East, 13% annual growth. This is buy-to-let hotspots. That's a 13% annual growth. So it's right here at the top. And then we have Glasgow at the bottom. Of course, this is as Scotland comes in with some very heavy red tape, tax changes, regulation. And it's, of course, had a consequence as to investors perhaps not feeling confident in the market and moving away. Just behind them, you've got Birmingham and you've got Leicester. But again, see, London is up. London is also home to the largest group of multi-property landlords in the UK, followed by Manchester, Birmingham, and Nottingham. Simply Business says it's possible that stamp duty increases or higher mortgage rates and strict energy efficiency regulations may make portfolio ownership less appealing or simply unattainable for landlords. In this context, housing and multi-occupation has become increasingly attractive. And it has been for quite a few years, but even more so now as landlords look, of course, to make a profit. So, I don't know if you have any questions with regards to rentals. Landlords are making more money. So let's look here, Raphael. Are landlords actually making more money by selling their properties instead of renting them out? Oh, that depends. I guess that is relative to whether you have any equity in the property. Definitely, I know there are landlords who purchased property in the last 5 years that don't have any equity. So if they sold now, they wouldn't make any money. I think a well-run property investment in the right structure, I think you're always going to win, Raphael. But that's just my opinion. So, Andrew, with interest rates and tax going up, is buy-to-let still profitable? Absolutely, 100%. It's still profitable. Have you ever thought about leasing a property out rather than renting it out? Yeah, there is a good strategy for that. More monkey business. And certainly depending on what type and what region, where region you are in the UK. But leasing out a property is definitely also viable, especially in places like London where the entry to the market is so much more expensive from a house price point of view, but also from a mortgage point of view and a deposit point of view. So absolutely, there is a place for leasing, and it does become viable. So guys, thank you very much. Appreciate you joining me. And if you haven't subscribed to the channel, make sure you do. And as always, we are having our landlord webinar in the next few months to come. If you missed our previous one, if you go into the About section within the YouTube, you can go to free resources and you'll be able to watch that re-recording of the webinar, but also register for the next upcoming one. Thank you very much. Much appreciated, guys. Have a good day.